Episode, Pete, 196. It's around there somewhere.
To quote Matthew McConaughey, all right, here we go.
All right. Welcome to the Rebel's Edge, folks. I am John Najarian. The less handsome one is Pete Najarian.
Yes,
and
I've heard.
Jared is handling all of the technical issues like bears and bulls fighting and bulls apparently kicking bears' butts.
Again.
What is it, 10 or 11 days in a row, Pete?
It was 11 yesterday. I only know that because last minute you and I got a call about maybe joining Larry Kudlow on Fox Biz.
That's right.
And you got busy flying. And so I was still here and I was able to do it. And it was funny because Larry was saying to me, John, he goes, hey, had 11 straight days of this. Where are you? Minnesota or parts unknown? I was like, kind of parts unknown, I guess. So it was 11 yesterday. If we get another one today, John, I mean, we just keep on stacking these things up as far as the Dow is concerned.
Yeah. Well, and the NASDAQ's the real outperformer, of course, folks. And we've got two huge earnings coming our way tonight with Google and Microsoft. And there's a host of others. Mm-hmm. But those are two of the mega caps that have earnings tonight. And maybe we'll get a chance to opine about those. But we try to keep the show tight and on schedule. So, Pete, let's start off with the Macro Minute. We don't have any fancy intro for that. So the Macro Minute today is Google and Microsoft. After the bell tonight, they really set the tone for the tech earnings on stage over the next 2 weeks.
I think that's exactly right, John, especially with the fact that we kicked off this whole thing, earnings season, as we call it. Earnings are always happening, by the way, folks, for anybody who's newer to the markets. But that being said, we start off with the financials. We've gotten a lot of that, John, and they've actually reacted very nicely. The financials had a really nice ramp to the upside, along with regionals as well. Regional banks have done pretty daggone well as well. So that's all been great. Now we get into the real stuff, right? The stuff that's been really flying. And can it still fly? And was it moving for the right reasons? We're going to know all those answers pretty soon by the end of the week when you've got Amazon, you've got Google, you've got Microsoft. We've also got, by the way, the Fed. There's a lot of things in front of us right now as far as the macro side of things.
Well, Pete, we're now at the segment of the show that we call Fantastic Futures.
Fantastic Futures.
Kind of spooky.
And if you like chocolate, and most of us do, I don't even think I have really a sweet tooth, Pete, but I do like chocolate. And the prices of sugar hit an 11-year high earlier this year. The price of cocoa just keeps going up. And of course, that's a raw ingredient that goes into chocolate. So cocoa prices are up, I think, 36% on the year, Pete, and up another 2% today. That's my future.
All right, I got this one. Just to keep an eye on it, folks. I think it's very important. Take a look at the 10-year. Now on July 10th, it was over 4. That was a big number, right? A week or so later, you get to the 19th. Now you're at 374. It looks like we're going in the right direction. That's coming down, blah, blah, blah. Now all of a sudden she's going right back up again. And it's right around 3.9 today. So we are approaching 4 very rapidly. A lot of movement. That's a lot more movement than normal. And I will tell you this, in our recent past, when we get to 4, people seem to want to get their hands out, selling stocks, and they start jumping over. So be very careful and keep an eye on that 10-year. You don't got to stare at it, but I think it's very important to know exactly where it's trading.
Absolutely, it is. And you've been spot on, Pete, about what happens when it crosses that 4 threshold. All right. Well, this segment brought to you by BackTech. I did an interview at the NASDAQ, Pete, last week with the CEO of BackTech. It's a really interesting thing because mining, and it doesn't really matter whether you're talking about gold mining, silver mining, or whether you're talking about mining for the rare earths that are in the batteries that we need for all these EVs. They make a mess, generally speaking, when they're pulling all this stuff out of the ground. It's not an easy process, and it's a messy process, and you end up leaving a lot of stuff especially in the case of gold, Pete, there's a lot of arsenic and other stuff that you end up dislodging that you might not want in your water supply and so forth. So BackTech, this is a company that has a bio-leaching process whereby basically they say our bugs eat rocks. And what they mean by that is that they can bio-leach these things and take virtually all of the bad stuff out of these tailings, the tailings being, of course, what's left over. So they're a commercially proven environmental technology company. They've been doing this for quite a while. They're going to be doing a huge project, Pete, in Ecuador. And they just got approved for their green bonds. And what's a green bond? Well, so you can imagine that if somebody that's not exactly ESG is out there raising money with a bond, in other words, they're borrowing money from people and paying them an interest rate and so forth, they generally don't get as much of a benefit of a lower rate, but the green bond people do. So in other words, I'm not going to fool anybody and say, oh, if you want to get a bond for a steel mill because it's dirty, you're not going to get a bond. Of course you are, but you're going to pay a higher interest rate. Because of all the money chasing green bonds, Pete, you get a better interest rate. And that's what these guys just got. Proceeds from these offerings are going to be used for BackTech to basically build out this huge facility that'll ultimately be either 5 or 10 facilities, Pete, in Ecuador. Name of the company again is BackTech, and we'll be talking more about them, but just wanted you guys to know, and they are a sponsor of this segment of the program, so giving them a little love there, Pete.
The only love I'm not going to give him is I'm jealous of that guy's full head of hair. Other than that, I like everything he's doing.
I was a little jealous of that too.
Son of a gun.
Let's dive into, let's say, a cloud security play, Pete. FFIV. This is F5. They blew by estimates, came in nearly 40 cents above the estimates, which would be about 20%. I guess it was probably 18% above, Pete. They see early sign of demand stabilization. I'll put that in quotes, demand stabilization, because what we want to hear from companies is, hey, if the demand instead of ebbing is stabilizing and maybe even starting to hockey stick back up, that's why this stock's up double digits today, Pete.
Yeah, and it actually was up even more, John, and then kind of eased back a little bit. But it's, the stock actually got up close to like 168, and then it kind of eased back, like I say, up like, I think right now, something close to 5%. What I really liked seeing was the margins. And the margins did, and they're projected to be very strong. They're looking at something close from, they were looking from 28, now look at 33. Anytime I see that going up, that's a good sign. I like what they're doing. And John, they've got a commitment with that free cash flow that they've got to buy back shares. I've always liked some of these buyback programs. These guys are doing the right thing, got a great balance sheet. So for all those reasons, I think this is a name that people ought to keep a very close eye on, because I think it could test up there towards those 52-week highs.
I wouldn't be a bit surprised. And again, being able to deliver that via the cloud is pretty key, Pete. Mm-hmm. So we go, and by the way, Pete's spot on. It was 168 on the highs today. Right now it's trading about 159. So it's definitely given back more than half of that double-digit gain. Mm-hmm. Let's talk about Logitech, Pete. LOGI. These guys, huge beneficiary of the lockdown. Why is that? They're a Swiss company and they make peripherals. So if you're somebody who has a wireless keyboard like this, or a wireless mouse, or any of this stuff, chances are it could be Logitech. And they also made some of the best cameras, Pete, for people that were stuck at home and doing Zoom calls all day long. So this company had a nice report. They beat on top line, bottom line, and they raised outlook. That's the triple play.
Yeah, they hit everything, John. Matter of fact, that's a good reason why it's now 52-week highs is what it was hitting today. So it got a nice jump up over $71 a share. Nice move for the stock. I will tell you this too. They reduced the inventories. The operating expenses are solid. They really are doing what seems to be everything right. And you look at the PE of this company, because they actually do have an E. Not a lot of these stocks do, yeah. But the PE, the company, is trading right around 21. They've got cash over debt of $1 billion. There's a lot of things to like about Logitech, which is exactly why it's making 52-week highs today.
And I'll point out that even though I mentioned the cameras, folks, one of the issues here is that the camera sales were down 31%, 31% year over year. So, it's just one of those purchases that you probably only buy it once, Pete. You might buy a series of keyboards and mice, of course, because they break, or you get mad and you break them. You probably don't break your camera much. All right. Let's talk a little bit about RTX, because this is Raytheon Technologies.
Mm-hmm.
So when you say Raytheon, you think defense, and that would be correct. But they changed the name to RTX, and it's up double digits, Pete. They topped expectations, and then the stock tumbled following results that were great, but their Pratt & Whitney engines, which you can look out on a jet that you're flying on, whether you're going to Europe or just somewhere domestically, chances are it's a GE, Pratt & Whitney, or it's a Rolls-Royce, one of those three. And Pratt & Whitney engine disclosed a defect. So that's why the stock's down double digits, Pete.
Yeah, they've really hit this one. This one's all the way down towards 82, John. Last I looked, could even be lower. Maybe it's a little higher. I'm not really sure, but that's very close to the 52-week lows. Why is that? Because of exactly what you just said. The one thing that's interesting is the CEO did make at least he presented it this way. He said, this is not a safety issue. It's a quality issue, which is pretty important. And I would hope that they did that very early in whatever projections they were throwing out there, because this is a $120 billion deal with Pratt Whitney that they put this thing together with. And now this is really a big struggle. And this could be something where people are looking, saying, hey, look, Delta has a hell of a lot of these things. Should I be concerned? Take a look at what was happening to Delta stock today as well, getting hit a little bit. So there is a little bit of a reaction on top of what we're already seeing just to RTX itself. But I'll tell you, at some point, John, I don't know that you'd want to jump in too early. At some point, this will turn, especially if that narrative is correct. And I think we'd start to see this stock make a nice move. But I think you don't have to be the first guy in the boat on that one. I think I'd wait to see a little bit of activity that pushes this thing to the upside off of some other news release about what it is that they're doing.
I'd like to see that too, Pete. And, we are not your financial advisors, folks, but what I would do is about what Pete said. I might even start dipping my toe in here, though. And here's why, Pete. And again, this is not financial advice. It's what I'm doing. I would probably buy about a third of the position that I want to establish in this one, because to defense stock, because we've got a hot war going on right now. That's why, folks. And I think the Pratt Whitney thing, we're already $3 off the low of the day, Pete. It was down around 81 bucks. It's already 84 and a half. So could we go back down and test it? Sure. But 6 months from now, do I think it's back over 100? I do. So I'm never going to buy the bottom. I'm never going to sell the top. So I kind of scale in, and every once in a while, a blind squirrel finds an acorn.
True that.
Let's talk a little bit about Spotify. This is, of course, the home of Joe Rogan and a bunch of people on podcasting. Guess what, Pete? And I loved this part. I'm not happy for them that they got hit pretty hard today, because basically they're increasing the price of their subscriptions for their premium products and bringing them up at least 10%. And some of the analysts are worried that, hey, maybe people will cut back. Well, they haven't cut back yet. That's just a down the road, maybe they cut back statement. But the big thing is, Pete, that they cut those two losers, the Duke and Duchess of Sussex, or whatever the heck they are. They cut those two losers free.
They weren't exciting, you mean? People weren't coming over to listen to those two
listen
clowns?
to them talk about patterns of drapes and things like that. I mean, what in the hell? So anyway, I think that was a mistake, but obviously the fact that I'm not a big fan of the Duchess of Sussex, most people don't care what my opinion of her is, but I like the fact that they dumped those two.
Well, I'm going to go back to this thing and talk about this. The monthly active of users, that was up. So that was a decent number. Gross margins, however, were down, and that is always a problem. Here's the other problem. They don't make money. We like this product, right? We think they're great, but I'll tell you what, I took a look, John. They haven't made money in terms of, real earnings in almost 3 years. Now they've been around and they've made money at times, but that's a bit of a problem as well. So that's one of those things that I always view as a little bit nerve-wracking. Now, that doesn't mean that the stock can't go up, because it certainly has. It's been as high as 182 in the last year or so. But here we are today, and we're going through some of these numbers. And when you go through those numbers and you see where they are, it does make you kind of scratch your head and say, you know what, maybe these guys are still a little bit overpriced. I'll trade them with options when I see those options and look for things to happen. But I'll tell you what, I'm not a huge buyer of the stock at any point, at least not right now, John. I'd like to see them figure this thing out and start making money again.
Yep, it's pretty vital that you do. They're certainly attracting a lot of people. And, I love my Spotify account, Pete, but I don't even have the premium account. I just have a registered account so that I can have my library of stuff I want to listen to, from Rogan to the music I like to listen to. And do I listen to Jason Aldean? You bet your butt I do.
He had to go there. He had to go there. And I'll tell you this, me too. Anyway, let's go back over to sports, John. Let's hit a little bit of the New York Football Giants.
Let's do it.
Why are we doing that? Well, because there's a guy named Saquon Barkley, who's one of the biggest beasts in the history of the NFL. He's only 26 years old. He's a running back. And now teams are already kind of writing off all these running backs, right, John? I mean, the reality is right now, general managers don't want to pay them what they probably should be paying them. And because of that, guys like himself, Dalvin Cook, who's got a few other things going on as well. But some of these running backs, why are they not signing? Well, they're not signing because they think they should be paid, and they're not being offered the types of money that they want to get paid. Today, it finally happened. Barkley got an $11 million contract. $1 million of that he's got to do through incentives. But here's the thing, John. Daniel Jones is actually turned out to be a pretty damn good quarterback for the Giants. Why is that, though? Well, it might have something to do with the fact that he's got Saquon Barkley back there. He can throw him the ball. He was second on the team in receptions this year, maybe even first. I think he had 57 of them. He ran for 1,300 yards. So you've got a guy who's like this incredible athletic freak who can do a lot of things. He can make defenses very, very nervous when he's running the football because he's big and strong, and they got a nice offensive line with the New York Giants. As a matter of fact, they got a kid from Minnesota this year they drafted who's going to be a starting center, I think, game one. But why is it, John, that they don't want to pay these running backs? Well, because they don't think they're worth it. Here's the thing. You and I talked last week about Derrick Henry and the fact that they finally got Hopkins. That suddenly makes Tannehill look like a pretty damn good quarterback, in my opinion. We'll find out very soon. Everybody's in camp. Now you're going to get Saquon back. He almost sat out the whole year. He was so frustrated. But instead, we get to see him. Now we need to see a couple of these other running backs. But I'll tell you, you were a linebacker. I was a linebacker. John, the problem is this. If you don't have a running game and I'm a linebacker, I don't have to worry about a running game, and I'm going back on almost every play because they don't have a running game. They don't want to run the ball, so they're going to throw the ball. And I realize it's a throwing league. It's a throwing league, but the problem is when that's not going well, you need something else. You need a running game, especially in the playoffs, and that's where I think these teams are really missing out.
Yeah, and you already know this, Pete, but the Raiders have the exact same problem.
Yep.
Because the Las Vegas Raiders, they have Jacobs, and he's a great running back. Saquon Barkley is an exceptional player, and like Pete said, he's a freak show. I think the guy has a squat heavier than virtually anybody else in the NFL, and he's a 210-pound, 215-pound running back. It's amazing. He's got quads, hence the name Saquon Barkley, that would just amaze. But he runs right through tackles too. And I've seen him move, like when they hit him, Pete, I've seen him move a pile of 3 or 4 defenders, just keep those things pumping. and he just drives downfield. He is a freak show. You're right. And Jacobs is even probably the closest to him other than Henry. But Jacobs might even have a little more speed. I'm not saying Saquon is not fast, but when I've watched Jacobs, Pete, he looks incredible. By the way, my daughter was at a celebrity golf outing with Saquon Barkley and a bunch of these guys over at Liberty National, a place where did you play over there, Pete?
I did. Yeah.
It's got the Statue of Liberty in the background. It's in Jersey, but you're looking right at Manhattan from there. And she said the guy was the nicest man too. And that he was signing autographs for people and all that. So, kudos to the Giants. They needed him in camp. If you miss all of training camp, I guarantee no matter how good you are, you're not going to have a breakout year because he's going to be in camp, take a few hits and get himself into football shape. He's in great shape, but get himself into football shape. He will be ready for the season. And the Giants, whatever you thought of him before, you have to be even more worried about him now.
Yeah, absolutely. And Daniel Jones, by the way, I didn't realize how good of a runner he is. On top of being the quarterback and throwing the football, John, and only having 5 interceptions last year, the kid can run the rock. He was second on the team, and he averaged 5.5 a carry at almost 700 and some odd yards. So pretty impressive. Next, we're going to go to another part. We're going to mesh these two things together. It's the NFL and investing. And here's what I mean by that. Daniel Snyder, he paid $800 million 24 years ago for the Washington. I don't know what team they are anymore, John. They don't have anything, right? I mean,
Commanders, allegedly.
Well, they sold it to Josh Harris and his group and blah, blah, blah. And they already own a couple other pro franchises. But it's interesting because, I don't know, are they the Redskins? Probably not. Are they, the Commanders? Probably not. Are they the football team? I don't know. That's not exactly creative. But they're not all that worried about that. And he just sold it for $6 billion. So not so bad. And now he said Harris says, well, we're going to focus on the culture. Well, hopefully that's an easy no-brainer to figure that one out. But you've replaced the problem where that started. But how about this, John? So how is this for an investment? And you and I had the opportunity to go to Dallas, Texas. And who did they play? Oh, we just got done talking about them. New York Giants. They came down, played against Dallas. You and I were in whose booth again? Let me see. I think it was Jerry Jones.
Jerry Jones.
Who has a booth that goes from the 40 to the 40, and it's massive double-decker booth. Unbelievable experience. And he was called a fool, John, literally. By many people, he was called a fool because he paid $150 million for the Dallas Cowboys. Well, that was 1989, but I think that investment now that's worth $8 billion. I don't know who the fool is, but I know one thing. It ain't Jerry Jones. So it's pretty interesting, but you also have the Broncos sold for $4.65 billion. Carolina, when our buddy Tepper bought him, he bought him for $2.25 billion, John. So talk about investments that are probably working out. I can tell you this. I'm thinking that Carolina's probably worth something north of 4. I would say the Broncos are probably worth something north of 5 already, maybe 6 based on this, because that's a big stadium. They're a really fun, flashy team, and all the things that are going with it this year after the offseason they had, replacing coaches and this guy and that guy and everything else. So what do you think, John? If you could right now, if you were going to buy, this is where I wanted to go. What's the best investment? Is it the NFL still? Or is it the NBA? Or is it maybe Major League Baseball? I know you and Mark have had discussions with people. What do you think right now is the best place for the next, let's call it decade, next 10 years? What's the best investment?
Hands down, Major League Baseball at these prices, Pete, at the present price. And here's why. They're the only league that doesn't share TV revenue. The only revenue they share from TV is like the game of the week kind of thing. So that means that the Yankees and the Mets and the LA teams have a distinct advantage and are worth billions of dollars, plural, billions of dollars more, put Chicago in there too, I guess, than the rest of the league. So there's a lot of underpriced teams because of that lack of sharing. If all of a sudden they share, a lot of those teams double up, even triple up in value, in my opinion, Pete. Let me just throw this out there too, Pete. So Magic Johnson is part of Josh Harris's group that
Yep.
bought the Commanders, right?
Mhm.
In Vegas right now, the fourth best odds are that they will be called the Washington Magic or the Washington Magicians. That's number 3 and 4 for the betting money in Vegas for that, because he's magic. And
He is.
I'm going to say it ain't a half bad name. Would you like to play on a team that was named Magic?
Especially with Magic Johnson being part of it. Hell yeah. Let me tell you, you know this better than anybody, but there is nothing Magic Johnson touches that doesn't turn to gold, for God's sakes. The guy with his Starbucks franchises, he's got a piece of this, he's got a piece of that. I mean, I'll tell you what, that was a genius move because they didn't need to bring in investors, but they did. And they brought in a lot of guys that I think made sense to be smaller partnerships, Magic being one of them. But what a great face for the franchise, right? So why not? I love it, John. I think it'd be awesome.
Yep, I do too. And, I think you got to give Josh Harris credit, like you say, Pete, because they had the money, but they figured what would put us over the top, because Bezos can match our bid. Well, Bezos didn't have Magic. And, I'm not saying it was him alone. I really am not saying that, folks, but it certainly doesn't hurt to have one of the most famous ball players of all time, even if it's not in this sport. And the fact that he's a black man, if it was a black woman, it would be even better, Pete. But the fact that he is a successful black entrepreneur, as well as a fantastic Hall of Fame basketball player, that didn't hurt.
No. And the guy's damn near turned into a Hall of Fame investor. I mean, truly, I guarantee you this. He's made more money since he retired from basketball. The money he made in basketball, I'll bet you since then he's tripled that in just the work that he's done with Starbucks and all the professional sports franchises that he's a part of. Unbelievable. The guy is amazing. He is magic, and he is deserving of that name.
Yep. I've met him twice, Pete. The second time I met him, I asked him if he wouldn't mind signing the picture I took with him the first time I met him. And he did. What a nice man, too.
Yeah.
I would say only your buddy Shaq, Pete, is at that same level, because Michael Jordan is the GOAT, truly. But Shaq isn't the GOAT, but he might be the GOAT in terms of outside investing. All of those pizza franchises, all of those burger franchises,
Dunkin' Donuts, you name it. The guy's got a piece of everything, and he's never got, he's like Michael Jordan. He learned from Michael Jordan. He never got sucked into the money side of it. He pulled it over and said, look, instead of the money, let's not do money. I want franchises. I want this. And they worked it out. And that is a much better deal. Just like Michael with Nike. I mean, Michael did a lot of great, smart things that really, the money that he has made is just scary, actually, John.
Staggering, both of them. All right, folks. Well, we will be back tomorrow with another Rebels Edge. We encourage you to share the episodes with your friends. Remember, you can get them at marketrebellion.com/edge. You can see it on thestreet.com. I saw it yesterday, Pete. It popped up on Yahoo. And you can, this is going to be the biggest financial show, folks. Make note of it, because we're going to have even more coming your way soon. So have a great day. We'll see you tomorrow.